Welcome to Simple Investing Secrets. In today's video, we'll dive into the 15 best stocks to buy and hold for the next 20 years. Before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. The buy and hold investing strategy, otherwise known as long-term investing, entails buying stocks or other securities and holding them for a long time, sometimes decades. This long-term passive investing approach is different from active investing, in which an investor tries to time the market by buying a stock when the price is low and selling it when the price is high. Most buy and hold investors rely heavily on fundamental analysis, as that gives them a better idea about the future outlook of the stocks they want to buy. We've identified the best stocks to buy and hold for 20 years. We judge them based on how they run their businesses, how good their products and services are, how successful they have been in the past, and how well they can change to meet market needs. Let's review them now. Number 15. Costco Wholesale Corporation, ticker, COST. Costco is one of those retailers that attract business in good times and bad times, as customers either look to save by buying bulk goods during recessionary periods or just load up on groceries and household products when the economy is humming. Total sales were up 5.3% from November 2021 to November 2022, proving once again Costco's resilience in tough economic times. Bernstein recently gave Cost an outperform rating and a target share price of $586. They did this because Cost tends to have better than expected quarterly earnings. Costco is expected to announce that earnings should rise by 9% in the fiscal year 2023, with another 9% rise in fiscal 2024. As a longtime dominant giant in the big box retail space with a robust track record of growth, Costco belongs on any list of top long-term stocks in 2023 and likely much longer. Number 14. Johnson & Johnson, ticker, J&J. Johnson & Johnson is another corporate giant that has withstood the 2022 stock market decline. The company's share price has held the line, producing gains of 11.3% in the past year as of December 2022, and once again stands tall among dividend kings, having boosted its quarterly dividends every year over the past 60 years. True to form, J&J hiked its dividend by 6.6% in 2022, and its dividend yield is now 2.6%. With J&J in the hunt for Horizon Therapeutics plc, a rheumatic disease therapeutics firm that posted $925 million in sales in the third quarter, the company offers long-term investors both growth and stability heading into 2023. A new survey of investors by Jefferies showed that J&J was the most likely place for Horizon to end up. If the deal goes through, the Horizon purchase would be the largest healthcare acquisition of all time, surpassed only by J&J's recent agreement to purchase Abiomed Incorporated, a heart device manufacturer, for $16.6 billion. Number 13. United Health Group Incorporated, ticker, UNH. United Health turned things around in 2022, giving 18.3% back to shareholders, while most S&P 500 companies did the opposite, on average. Its shares closed at $542.91 as of December 2022, and United Health has seen 9 industry analysts upgrade their 12-month target price on its stock in the past 90 days. UNH's stock price target is $608, with a high of $635 and a low of $587 in the next 3 months. United Health continues to make money and has a strong market position. For 2023, the company has a lot of new deals and partnerships planned. While risks may be in play as COVID-19 and rising healthcare industry operating margins continue to linger, UNH's solid balance sheet and close ties to massive U.S. government healthcare investments should make UNH a mainstay for the long haul. Number 12. Home Depot Incorporated, ticker, HD. Home Depot, the biggest home improvement store in North America, is ending the year on a strong note. Since mid-November, share prices have gone up by more than 12% as consumers slowly start to spend money again. HD did well in 2022 because it had a strong dividend yield of 2.4% and a well-known brand name that people trusted. Even with record high inflation, HD reported a 5.6% increase in net sales over the past year, to $38.9 billion. Analysts that cover HD see more of the same going forward, with an eye-popping 15.7% annual diluted EPS growth rate for the company through 2027. Wedbush recently gave HD an outperform rating, and Sanford C. Bernstein said HD stock should be worth $337. That represents a 5.3% premium over Home Depot's share price as of December 2022. Number 11. Petco Health and Wellness Company Incorporated, ticker, WOF. Petco Health and Wellness Company Incorporated is a health and wellness company that focuses on enhancing the lives of pets, pet owners, and its Petco partners. It is one of the top IPO stocks to invest in. In October 2022, Petco Health and Wellness unveiled its one-stop holiday shop to include pets and their owners in holiday gifting with the new More and Merrier collection. In September 2022, RBC Capital analyst Stephen Shemesh started covering Petco Health and Wellness Company Incorporated stock with an outperform rating and a $17 price target. He said that the company is well positioned to take a bigger share of the fast-growing U.S. pet sector in the long run. Number 10. Apple, ticker, AAPL. Apple was the first company in the United States to hit a $1 trillion market capitalization, rising to $2.3 trillion at the time of writing. In February 2021, Apple controlled 40% of the US smartphone market. The company has evolved from a phone manufacturer to a megatech company with tentacles in other sectors. In 2020, Apple announced plans to start building electric cars and is already developing autonomous driving technology. Apple stock has increased by 476% in the 5 years to 2021. Number 9. Microsoft, ticker, MSFT. Microsoft may not be the colossus it once was, but it is still a force to be reckoned with. The company had a market capitalization of $1.8 trillion in February 2021. Though starting with desktop applications, Microsoft has also expanded into other areas, including games, remote work applications, and cloud services. In the 5 years to 2021, shares of Microsoft have risen by 385%. Number 8. Amazon, ticker, AMZN. Amazon is the world's largest retailer. The company was one of the biggest winners from the coronavirus pandemic, as the shutdown measures forced people to depend on e-commerce. Amazon, on the other hand, has used cloud computing to push itself to the top of the retail shopping world. Amazon shares rose by 546.8% in the last 5 years to 2021. Number 7. Advanced Micro Devices Incorporated, ticker, AMD. Semiconductors have been essential drivers of technology adoption. There is already a shortage of microchips around the world, which may be a sign of what will happen in the industry in the years to come. Shares of AMD climbed 29.3% in November of 2022 following a positive earnings announcement, a new product announcement, and analyst upgrades. Investors are bullish about the semiconductor stock's momentum in the data center industry, which is an enormous market that's growing quickly. AMD's server processor market share now stands above 27%, and it's expected to exceed 30% next year. The increase in demand for microchips should be good for advanced micro devices. AMD shares returned 5,024% in the 5 years to 2021. Number 6. Virgin Galactic Holdings Incorporated, ticker, SPCE. Interest in space tourism is growing. The consensus on Wall Street is that space will become a multi-trillion-dollar economy within the next decade. As the first company to offer space travel, Virgin Galactic is in a good position to take advantage of this growing market. Its shares rallied by 94% in 2020. Number 5. NextEra Energy, ticker, NEE. As the interest in cleaner energy intensifies, renewable energy companies such as NextEra Energy could become profitable long-term investments. NextEra is a pioneer in renewable energy, and it generates more solar or wind energy than any other utility company in the United States. The company has earmarked $55 billion for building new infrastructure by 2022, which will reduce electricity generation costs. NextEra Energy had a market capitalization of $163.7 billion at the end of 2022. NextEra Energy has plugged into the decarbonization megatrend. It has powered above-average growth over the last several years, which seems likely to continue. Because of that, NextEra is a no-brainer investment for anyone seeking a growth stock to energize their portfolio. Number 4. Tesla, ticker, TSLA. The future belongs to companies that will disrupt our normal way of life. No other company typifies this more than Tesla. The pioneer electric car company is leading the charge in the way we consume energy. It is more than an electric car company. In November of 2022, Tesla had a market capitalization of $779 billion and its shares had risen by 13,471% in the 5 years to 2021. Tesla's fundamentals remain solid, with the company reporting its highest monthly sales since its Shanghai factory opened in late 2020. Given the much tougher futures faced by its upstart EV rivals, Tesla looks like a solid bet. Certainly, it's not the time to sell as it remains a solid buy among EV stocks. Number 3. The Walt Disney Company, ticker, DIS. Disney has reinvented itself. The company's main way of making money has changed a lot, and it now focuses on streaming content through its channel, Disney+. Consequently, this former cyclical stock now offers a hybrid of growth and value. Disney's shares rose by 105% in the 5 years to 2021. Number 2. PayPal, ticker, PYPL. PayPal is at the front of the pack when it comes to card payment platforms, which are the future of both cash transactions and online payments. The $350 billion company is expanding into new markets. It began accepting cryptocurrency payments on its platform in 2021. It has also said that it wants to offer other kinds of financial services, like trading stocks, options, and derivative contracts. This would make PayPal a one-stop app for financial transactions. PayPal's shares rose by 772.19% in the 5 years to 2021. PayPal also hasn't been shy about pulling levers when necessary. It acquired Japan's buy now, pay later service Paytm in 2021. In 2023, it's aiming to reduce its operating expenses by $1.3 billion. It's a fast-growing nimble growth stock that's simply never been this cheap. Number 1. Visa, ticker, V. As the world keeps moving toward transactions that don't involve cash, companies like Visa will be around for a long time. The company has always made huge profits and is also adapting to meet the needs of customers in the future, such as by thinking about accepting crypto payments. Visa shares grew by almost 1,000% in the decade 2010 to 2020. Visa is a cash machine. It generated nearly $18 billion in free cash flow in fiscal 2022. The company used much of that cash to reward shareholders in the form of share repurchases and dividends, with enough left over for the company to invest in high-growth areas that should eventually be reflected in its share price. This concludes our list of the 15 best stocks to buy and hold for the next 20 years. Before putting your hard-earned money into buying stocks or investing in the market, you should always do your due diligence and research. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.